So the Federal Reserve, America's central bank, just made a move that has the entire financial world talking. Now they're saying, hey, don't worry, it's just a routine technical thing. But some are warning this might be a sign of something way, way bigger, hiding right in plain sight. So let's dig in and figure out what's really going on here. Okay, so this all kicked off on December 10th, 2025. The New York Fed puts out this statement, super quiet. I mean, for most people, it was just another day. But if you're someone who watches the financial system like a hawk, whoa, this was a signal that a massive policy shift was happening. And here's the number that's got everyone's attention. $45 billion. That is a huge figure, right? But honestly, on its own, it doesn't even tell you the whole story. The real jaw-dropper is the timing. Yeah, that's not a one-time thing. We're talking $45 billion every single month. What that really means is the Fed is going to be creating new money to buy up government debt. A program this big, oh, it's absolutely going to send some serious shockwaves through the entire financial system. Okay, and this is where the mystery really kicks in. The Fed is being super clear. They're adamant that this is not what you think it is. It's not that massive stimulus program we all know as quantitative easing or QE, the whole large-scale money printing thing to juice the economy. But some analysts are looking at this and saying, wait a minute. If it looks like QE and it acts like QE, it's probably QE. So what is the real story here? Let's break it all down. All right, first things first, let's hear the Fed's side of the story. They've given this new program a very official-sounding and, let's be honest, and intentionally boring name. They're calling it reserve management. So the idea, at least on the surface, is pretty simple. Think of the banking system. Banks need a certain amount of cash on hand, what they call reserves, just to operate smoothly every day. The Fed is basically saying, hey, it looks like those reserves are running a little low, so they're stepping in to buy government bonds from the banks. This pumps fresh cash right back into the system, to keep the gears of finance turning. And that's what they're calling these reserve management purchases, or RMPs for short. So here's the key takeaway from the Fed's official stance. They are framing this as purely a technical thing. It's like a plumber coming in to fix the pipes of the financial system. They're saying this has nothing to do with trying to stimulate the wider economy. And this quote from Bloomberg really nails it. You can see the media is just reporting what the Fed is telling them, word for word. This is for reserve management. It is not QE. They're drawing a super clear line in the sand. The question is that line actually in the right place? Okay, so that's the official story. Now let's flip the coin and look at the other side of this, because, some analysts saw this announcement and had a completely different take. They're pretty much convinced this isn't some new tool. It's just an old one with a fresh coat of paint. I mean, this quote really sums it up. This was the immediate gut reaction from the source material we're looking at today. It's this feeling of just pure disbelief. Like, how can the Fed announce something that looks so familiar, but give it a totally different name? So you gotta ask, why such a strong reaction? Okay, now this is where things get really, really interesting. I want you to just look at the language here. On the left, that's the official announcement for a program the Fed openly called QE back in 2019. On the right, that's the announcement for this new RMP program. I mean, the phrasing it's nearly identical. They're both talking about maintaining ample reserves in the system. So the logic from our source really boils down to this. It's a simple three-step argument. Step 1, the 2019 program was called QE. Step 2, this new 2025 program uses almost the exact same language and has the same goals. Therefore, conclusion, the 2025 program is QE. They just gave it a new name. Now, to really get why the source is so skeptical, we have to jump in a time machine and go back to 2019. Because this skepticism, it's not just about words. It's really rooted in the Fed's own recent track record. And hey, by the way, if you're getting something out of this breakdown, it would be awesome if you could hit that like button and subscribe to our channel. That way you won't miss any of our future updates. Just check out how fast things went south back then. On September 3rd, the Fed comes out all confident and releases its projections for the next 6 years. Just 2 weeks later, bam, a super critical part of the financial system called the repo market, it just freezes up. It's a huge signal that there's a cash crunch. And by October, guess what? The Fed was forced to hit the panic button and launch a whole new round of QE. And this right here is the heart of the source's evidence. The argument is that the Fed's forecasting models weren't just a little bit off. They were fundamentally, completely wrong, just a few weeks before a crisis blew up and forced them to act.
Okay, let's look at the actual numbers. Back in 2019, the Fed's most optimistic highest-end projection for what its balance sheet would look like in 2025 was about $4.7 trillion. So what's the actual number today? It's about $6.6 trillion. That's not a small miss. That's a nearly $2 trillion difference.
And when you see it on a chart like this, the difference is just, wow. It makes it so clear. You've got the projection, and then you've got reality. It's not even in the same ballpark.
Let me put that another way. The Fed's balance sheet right now is almost 50% larger than the absolute highest number they thought was possible right before that last round of QE kicked off.
And this, right here, is the reason for all the skepticism. The source is basically asking, if the Fed's own models were this spectacularly wrong just a few years back, why should we just take their word for it now when they say, don't worry, this new program is just a tiny technical fix? Okay, so based on all this, the source comes to some pretty dramatic conclusions about what happens next. And just to be super clear, what we're about to cover now is their specific interpretation, their prediction for the future. And this is the big one. This is the source's endgame thesis. They believe that this new program, whatever you want to call it, marks the beginning of the final, massive, all-out expansion of the money supply under the financial system we have today. So here's a quick rundown of their outlook. They're predicting that money printing is about to accelerate. They see a major economic event on the horizon, something kind of like what we saw in 2020, and eventually they believe there will be a fundamental shift away from the US dollar, with things like gold and silver playing a much, much bigger role. So look, you don't have to buy into the whole endgame prediction to take something really important away from all this. The core question, the one that's based on hard data, is still there. What does it mean for our financial system when the very institution in charge of it has models that can be off by trillions of dollars in just a handful of years? And that's really the bottom line. Whether you think this is just a simple plumbing fix or the start of something huge, the most important thing is to look past the headlines and dig into the data for yourself. That's always the first step to figuring out what's really going on.